There's a lot about the banking system that we know, that we take for granted, that we're taught in school about a certain way the economy works and a certain way that banking services are provided for. And if you grow up really not thinking about the entrenchment of that system, it's easy to just actually not think about it because of the ease in which we now can actually process payments and things seem to work really well in ways that feel very good, expedient, electronic execution versus, physical trading on floors. Like everything just feels like it's advancing. But that's all surface.
You mentioned a predisposition to being cynical about the system. When I first learned about Bitcoin, I was going through a similar thought process. A lot of the traditional finance is heavily guarded and gatewayed, if that's even a word, by traditional institutions, and they're benefiting from this massively. You know, there are mandates to do whatever you need to do in the finance realm through financial institutions, and in other words, they're kind of protected and their customer is guaranteed. There was this analogy that someone said being in finance is like being at the tight tight part of an hourglass where there's a lot of money going through and you just pick a little bit of it every time. So it has been, it has been a way that the mandates or the limits we've placed on the financial industry has created this permanent captive customer for older financial institutions, where they simply have to charge a fee for their services and they don't really have to compete. If you don't like Chase, where are you going to go? Bank of America, same thing. Wells Fargo, same thing. It's kind of like you're not getting much of a competition there, and it's by design. But this whole alternative assets, even Trump's meme coin, which kind of sounded outrageous to me, but it has another side which shows that actually we are disintermediating these institutions, and there is no barrier anymore. Anyone can go online if they have an audience. Anyone can go online and make themselves tradable 24/7 across the world. I don't know how banks will be dealing with this. I know that they'll probably love to get on board. Well, they probably have thought about stopping it maybe in the past few years, but that's not possible. And that was actually one of my key issues, where when I was learning about Bitcoin, I was considering, is this thing killable? And then after some months of studying, I realized that it's a resounding no. So that's where I actually, YOLO'd into Bitcoin. So without that option, these traditional institutions will probably have to join and then benefit from charging fees, continuing to charge fees on transactions. But they can add a lot of value, especially because they're regulated. They can add easy insurance. They can add a lot of financial products because they are set up for it. They're integrated with everyone else's financial activities. They can do it, but I suspect there is still regulation that's preventing it, right? The SAP 121 and probably a lot more that I don't know about. They are preventing banks from offering services. Do you think, this year we can get some reprieve and maybe enable banks to custody Bitcoin or provide easy trading? It would be a game changer if you can buy Bitcoin directly in your Fidelity. Although you can buy ETFs right now, but you can't really withdraw, or you can deposit Bitcoin, and you can get loans on your Bitcoin stack and so on. And I suspect once banks get into this game, that will be one of the first things they'll explore.
Yeah, there's a lot about the banking system that we know, that we take for granted, that we're taught in school about a certain way the economy works and a certain way that banking services are provided for. And if you grow up really not thinking about the entrenchment of that system, it's easy to just actually not think about it because of the ease in which we now can actually process payments, and things seem to work really well in ways that feel very good, expedient, electronic execution versus physical trading on floors. Like everything just feels like it's advancing, but that's all surface. The back end is actually still very, very, very obsolete. And the thing that crypto is doing actually is really turning upside down some of the most fundamental assumptions we have taken for granted in the system. For example, when I was a kid, I remember learning about a stock for the first time, asking my dad some questions about it. I think I was in fifth grade. And, I asked him, like, what is a stock? And he said, it's basically, your right to owning a piece of a company and its associated income as a shareholder and profit participation. And I said, that's really cool. So, like, if I have a Microsoft stock, like, does Bill Gates know who I am? And my dad was like, well, no. And I was like, why not? And he was like, because you're, technically not on their books and records. So then I was like, oh, so I don't own it. He said, no, but you do own it. So then actually, when you go down this path, even as a fifth grader, you kind of just realize there's a lot of asterisks to things that you're being told about the certain representation of what a financial asset is and it isn't. And the thing about Bitcoin that's really amazing is actually it's attacking at the core this issue of custody. The example I just shared you with Microsoft, where you have an intermediator as a custodian who actually is the holder on the books and records, there's a lot of benefits that come from it, of course. It makes settlement easier, it makes clearing easier, it makes fraud probably less prevalent in the ways that protects consumers. But in the end, you actually don't own it. And Bitcoin is the thing that really turns the custody model upside down. There's risks actually that come with this too, which is a risk that I don't know if everyone in the world is ready for. But at the same time, it's a new way to think about a financial primitive. And I think that's the exciting thing about crypto and why regulators are so concerned about the ways in which there seems to be a lot of obfuscation and a lot of stoplights along the path. But the reality is, it's really attacking the core, the social contract of the banking model, which is custody. Uh, that of course has implications for lending, as you've called out on. There's implications for that on derivatives that exist on top of the ownership of those assets. But let me tell you something about Bitcoin ETFs in ways that I think has been a great product market fit for a variety of investors. There are a lot of people who still want to own Bitcoin, but they don't want to have the worry and the insurance of thinking about custody. And this is a very much a human thing. Humans have lots of other things they need to focus on that they have 99% of the mind share on. They do not want to deal with self custody if they feel that this is not value add to them. And the Bitcoin ETF actually is a thing that helps bridge this gap. And the beautiful thing is, because it fits into the regulated system, you can actually now lend Bitcoin through the stock lending program as it exists in the regulated markets without counterparty risk. So actually, there are positive EV features about the Bitcoin ETF that Bitcoin actually still may not be able to compete with. The amount of liquidity that the ETFs can draw because of the social contract that exists in that model creates all kinds of things possible without it being yet possible in native Bitcoin. Now, of course, the trend of DeFi and all the things we're imagining is that we'll find that parallel track to succeed. But there are a lot of people who still want to own Bitcoin in their regulated accounts. They want it in their tax advantage IRAs. They want it in their Roth IRAs. And they want it to play nicely with their financial advisors. And they want it to be represented in a broker statement that looks with other multi-asset portfolios. So there's a lot of benefits to having crypto plug into the traditional system, all the same in the ways that it brings and onboards new adoptions and new utilities for the traditional system.